Hey everybody, Brian here. It's Wednesday, the 17th of February, 2016, and the market continued this nice rally here off the lows from a couple days ago. And we started with a gap higher and closed pretty much near the highs of the day. We were up 1.6% in the S&P 500, and of course that prior level of potential resistance was just obliterated at the open, and that's why we call it a potential level of resistance. We don't look at it and say, okay, I'm smarter than everyone else, I'm going to short here and expect it to just fail. Instead, we say this is a potential level of resistance, but we have a rising 5-day moving average, so it's innocent till proven guilty. I'm not going to sell short unless we have evidence on shorter term timeframes that that's the correct thing to do. Any technical indicator, oscillator, moving average, prior consolidation level is a potential level of resistance or support. It is not an action point. It is something to look at closely and say, okay, what's the psychology there? Let's take a closer look at the market action. Here's today's market action. Today we saw the market gap higher. It briefly went below the volume weighted average price. It came roaring back up through it and closed pretty much near the high of the day. It consolidated near daily R3, but it didn't fall apart there. And as it says on the sheet every single day, we simply do not want to be shorting while the volume weighted average price for the day is rising, and we don't want to be a short seller for anything more than a day trade if the 5-day moving average is advancing. So in other words, if we were making lower highs and lower lows below today's volume weighted average price, maybe we would have shorted it for a day trade, and then had it maybe come down like this, then perhaps you would look to transition partial into a longer term hold, but there's simply no point in being short while the market is rallying. Yes, we ask ourselves, where has it come from and where does it have the potential to go? And then we look at it and say, okay, if it's come a far way, so maybe I'm not comfortable buying here, but I certainly don't want to fight the momentum and be a short seller. So where do we have the potential to go from here? Well, that 50-day moving average isn't so far away anymore, and this is 194 to 195, a potential level where resistance is found. If you're going to do Fibonacci's, you take the Fibonacci off of an important high, such as the all-time high, and you take it down to the low. So a 38.2% retracement gets us right in here at about 193 and a half, and that 50-day moving average is up ahead as well. So these are potential levels of resistance, but there is nothing at all to indicate there is any resistance being found right now. You can see that we closed pretty much near the high, and yes, it is uncomfortable to buy up here, and I would not do it. But I also don't want to throw my money away and try to be smarter than everybody else and think that I can pick the top and short sale, initiate a short sale in this area. So perhaps this is let's talk about a bigger scenario. What if we have this? What if we have a big inverted head and shoulders formation about to come to fruition? So we've got that trend line. We run up a little bit. Let's say tomorrow, over the next week and a half, we do something like this. And could that be the end of this bear market? It certainly could be. I'm not here to make predictions. I'm here to observe where we are. I'm ready to change my mind when the market tells me to. We changed our mind about shorting this market when when we got back above that 5-day moving average and it was rising. I didn't believe it would go this far, but the market doesn't care what I think. I simply, if I don't believe it, it's better to be on the sidelines in cash, wishing that you were in the rally than it is to be short the market and wishing that you were out of the move. The Nasdaq also continued higher here today, obviously up a couple percent here, up 2.25%. And yes, it's getting extended to the long side, and we didn't find resistance at the 20-day moving average. We didn't find resistance at the let's take a look at the year-to-date volume weighted average price here. We didn't find resistance at that year-to-date volume weighted average price, but the volume weighted average price is an area to look at the action, like over here. let me just back that all up, to take a look at the action like over here. And then when it breaks support, then you get short. And you get short, for a day trade at that point because we still had a rising 5-day moving average. But when it breaks back down below key levels and makes lower highs and lower lows, then you get short for swing trades. So now, what's the potential scenario? Let's talk about for maybe we pull back down towards 100 and find some support in there. Here's our the 2-day volume weighted average price is going to be important in these markets. So maybe we pull back down towards 101 tomorrow. The S&P 500, the 2-day volume weighted average price or week to date is right down near today's low. And volume weighted average price since this move is too far away right now to really become part of what we're thinking about and considering as important levels. So the Nasdaq, maybe we pull back down towards 100 to 101, but there's nothing to suggest that it will do that yet because again, we are still showing the pattern in here from today of higher highs and higher lows, closing above the volume weighted average price for the day. The Russell 2000, not as strong today as it got, kind of crossing back and forth above and below that VWAP, but it's still holding up above the week to date volume weighted average price. So if we start pull back tomorrow, be aware of the week to date volume weighted average price. That tomorrow will be a 3-day volume weighted average price, and then below that we've got the VWAP from the lows that we had seen last week, and that's in near the 5-day moving average, which comes together at this prior little band of resistance. So the bigger level 97.5 to 98, but we're making progress. We broke this trend line, and the path of least resistance in the intermediate term still is higher, but we are getting into areas where it makes sense that we have the potential for resistance. And until it's found though and the market turns lower, it's foolish to try to sell short. Think of all the people who have been chewed up this week trying to pick the top here. It's simply not good low risk, high probability trading. The semiconductors might be headed up towards $50 a share before this bout of strength is over. That will bring it up towards that declining 50-day moving average. And then, again, perhaps we're going to see something like this as well, where we see an inverted head and shoulders pattern form. I'm not here to say that the bear market is going to last for a year, for 18 months on average. That's all good, interesting information, and we do have some of the strongest rallies in downtrends overall. So let's just keep an open mind rather than saying here's what has to happen. That's the essence of trading. Listen to the message of the market objectively. Get involved when you see a low risk setup, and move to the sidelines when you're uncertain. Cash, opportunity cost, of course, but opportunity cost is better than losing cash. So, if we break below 49 in the semiconductors tomorrow, maybe that brings us down towards 48.50, the week to date volume weighted average price. But I'm not looking for this to make a dramatic turnaround because we don't have the evidence in any of these markets that sellers are showing up. Buyers brought the biotechs right to the high of the day, and that's where they closed. So you can say, well, we're at a declining 20-day moving average, and rallies below a declining 50-day moving average are guilty till proven innocent. But it doesn't mean you just dollar cost average into it with no plan. That's what uneducated people do. That's not why you are traders. That's not why you're listening to me right now. Here's a potential band of resistance for the for the biotechs rather, and ideally it would run up through there, begin to pull back, sideways, pull back, find some support, and then maybe build a right shoulder in here as well. I'm not predicting, I'm laying out potential scenarios, but for right now, it makes no sense to be short. We're above today's VWAP, we're above the volume weighted average price for the week, and here the volume weighted average price year to date is way up here, still at 278. Maybe that's where we're headed. It's certainly possible. This has been an important level, and perhaps that volume weighted average price comes down to meet it. Apple was up today, up a dollar. What was this? $1.48 or 1.53%. I do not suggest chasing after a break of resistance. It doesn't mean it can't work sometimes, but the question becomes, Do you want to be the person who buys here? Where does your stop go at that point? I would rather, let the stock go without me or wait for a pullback and look for better evidence that buyers are gaining control. Don't lose sight of the fact that Apple has still got an ugly daily chart, but perhaps we're headed towards the 50-day moving average. Let's see if you're interested in Apple, perhaps we see something like this unfold, and then we can kind of see what happens after that if it gives us a better buy opportunity. But it's still not there, not from a risk reward standpoint.